Thanksgiving dinner, my grandmother asked me, what the heck is this Bitcoin stuff anyway, right? And I said to her, do you remember when Visa cards first came out? You were used to paying with cash or with a check, and then a Visa came out. It was this weird payment system that you didn't understand. And she said, yeah, I remember that. I said, well, Bitcoin is just the next evolution of another payment system.
Brace yourself, Nakamoto was the foundation.
What up guys, Nakamoto Crypto here. As you all know, 2020 has been the mass adoption year for Bitcoin. Billionaire investor Paul Tudor Jones is now advocating Bitcoin and urging investors to put their money into BTC. Grayscale, another company, is buying thousands of Bitcoin on a monthly basis, fighting to own at least 5% of the entire cryptocurrency market cap. Right after that, Michael Saylor, the CEO of MicroStrategy, has announced that he is putting over $400 million into Bitcoin and betting on the cryptocurrency for the next 100 years. And now today, we have JPMorgan, the single entity that has been advocating against Bitcoin for the past decade, is now publishing a report discussing 3 bullish reasons for Bitcoin's long-term potential. JPMorgan is worth $316 billion and it is a banking giant. They are now saying that the potential long-term upside for Bitcoin is considerable. This is an optimistic stance towards the dominant cryptocurrency right after PayPal allowed its users to buy and sell cryptocurrency assets. Macro Kruger just tweeted that JPMorgan went from saying Bitcoin is a fraud and it will blow up back in 2017 to now stating that Bitcoin is the #1 asset that is competing with gold. In 2020, 3 years later, we have come a long way. The main factor put forward by JPMorgan's Global Market Strategy division is Bitcoin's competition with gold. The note obtained by Business Insider reads, the potential long-term upside for Bitcoin is considerable if it competes more intensely with gold as an alternative currency. We believe, given that millennials would become over time more important components as investors on a universal scale. The analyst also pointed out the large valuation gap between Bitcoin and gold. At least $2.6 trillion is said to be stored in gold. In contrast, the market cap of Bitcoin remains at $240 billion. JPMorgan's notes essentially emphasized 3 major reasons to support the long-term growth potential of Bitcoin. First, it has to rise 10 times to match the private sector's gold investment. Second, cryptocurrencies have a high utility in the future. And third, BTC could appeal to millennials in the long term. Following the integration of crypto purchases by PayPal and the rapid increase in institutional demand, Bitcoin is increasingly being viewed as a safe haven asset now. There is a massive difference between the valuation of gold and that of Bitcoin, as BTC has many distinct advantages. The JPMorgan analyst also noted that mechanically the market cap of Bitcoin would have to rise 10 times to match the total private sector investment in gold via ETF and bars and coins. And that will put the price of Bitcoin at a whopping $100,000. One of the advantages Bitcoin has over gold is utility. Bitcoin is a blockchain network at its core. That means that users can send BTC to one another on a public ledger efficiently and practically. To transfer gold, there needs to be a physical delivery, which becomes much more challenging. As seen in many cold wallet transfers, it is easier to move $1 billion worth of capital on the Bitcoin blockchain than with physical gold. The bank's analyst further explained that cryptocurrencies derive in value not only because they serve as stores of wealth, but also due to their utility as means of payment. The more economic agents accept cryptocurrencies as a means of payment in the future, the higher their utility and value goes. So how long would it take BTC to close the gap with gold? Well, Bitcoin is still at an early stage in terms of infrastructure, development, and mainstream adoption. Only 7% of Americans previously bought Bitcoin according to a study. Some major markets in the likes of Canada still lack a well-regulated exchange market. Large banks are yet to provide custody of crypto assets, and that gives Bitcoin a large room to grow in the next 5 to 10 years. So this next decade is the deciding point on whether or not Bitcoin will be adopted by the institutions. So even if it doesn't become one world currency, major exchange trading funds, major hedge funds who are currently holding billions of dollars are all betting on Bitcoin, meaning that in the future, Bitcoin will be that store of value and hedge against the US dollar, fulfilling Hal Finney's $10 million per BTC prophecy that he did 10 years ago on a forum based on his mass adoption calculations. That, ladies and gentlemen, is the power of BTC. Like the video, share, subscribe for some daily crypto content. I have been Mr. Nakamoto Crypto, and I'm out.
Bitcoin under $8,000.
Buy it.
Bitcoin under $5,000.
Buy it.
Bitcoin over $10,000.
Buy it.
Bitcoin is over $20,000.
Buy it.
Bitcoin under $8,000.
Buy it.
Bitcoin under $5,000.
Buy it.
Bitcoin is over $10,000.
Buy it.
Bitcoin is over $20,000.
Buy it.
Best performing asset in the last 10 years. True. Look into crypto, we need volunteers. No need to tiptoe, it won't disappear. Do your research, history made it clear.